Everyone hates BlackRock. They're the world's most hated asset manager. But while the internet fumes, they're quietly making investors rich, and if you play it smart, they can make you rich too. BlackRock isn't just another Wall Street firm. They are Wall Street. They manage over $10 trillion. That's more than the GDP of every country on Earth except the United States and China. They own pieces of almost every major company. Apple, Microsoft, Amazon, you name it. But they don't actually own those companies. They just manage money for the people who do. Pensions, governments, even rival funds. This is a common misconception I see on YouTube, but I feel if I go into dispelling it any further, bad things could happen to me. I do not have any thoughts of self-harm and want to live a long life. And they build that empire off one thing: trust and technology. Their software platform, Aladdin, tracks over $22 trillion in assets. That's basically the operating system for global finance. And that's how BlackRock turned managing other people's money into one of the most profitable businesses in the world. So yeah, people can hate BlackRock all they want. But here's the thing. They don't have to take money from you. They can make money for you. Every time your 401k invests into an ETF, every time a pension fund buys into an infrastructure project, every time a government wants exposure to private credit, BlackRock takes a small cut. They're the middlemen of modern capitalism, the quiet toll collectors sitting on every bridge for public and private markets. And now, those bridges are multiplying fast. Why not let BlackRock work for you? Why fight the winning team when you can join them? BlackRock's been quietly building an empire. They bought platforms like eFront and Preqin, giving them a front row seat into private markets most investors can't even touch. They've acquired firms like HPS Investment Partners and Global Infrastructure Partners, plugging themselves directly into private credit and infrastructure deals. And right now, governments around the world are opening the floodgates. Europe's adding private equity to their pension programs. The UK's planning to triple its exposure from about 3% to 10%. And in the United States, Larry Fink's been on Capitol Hill pushing to add private equity to retirement plans. That means trillions of dollars from ordinary workers could soon flow into private equity, private credit, infrastructure, and real estate. And every dollar that moves through those systems, BlackRock gets paid. BlackRock doesn't need to guess which stock will win. They don't need to pick the next Nvidia or time the next bull market. They just need markets to exist, and BlackRock clips a fee. It's the same playbook Visa runs. They don't care what you buy as long as you swipe. And those fees, they're growing. So while investors obsess over flashy AI names, BlackRock is positioning itself as the banker behind the next wave of global capital flows from aging bridges to new data centers. The beauty of BlackRock's model is that it scales with the world's ambition. Right now, most developed countries are facing the same problems. Their infrastructure is old and their budgets are broke. Bridges, power grids, rail lines, they all need to be rebuilt. And the governments don't have the money. That's where BlackRock steps in. They don't build the bridges, they finance them. They raise money from pensions, endowments, and sovereign funds, then loan it out for infrastructure, renewable energy, and digital networks. It's capitalism's oldest trick. Lend to the people who build the world and get paid back with interest. It's not just the West. Emerging markets, especially India, are where the real growth is coming from. Larry Fink called it out during BlackRock's Investor Day. A massive opportunity to channel global capital into fast-growing economies. So whether it's a toll road in London, a solar farm in Texas, or a data center outside Mumbai, odds are BlackRock's collecting a fee somewhere along the way. I've spent most of this video saying you should let BlackRock work for you, and I stand by that. But this next part might sound like I suddenly turned on them. I didn't. I just don't like the price. Historically, BlackRock's grown net income at around 8% a year. If we assume they convert that income into free cash flow and return it to shareholders, we can use their forward PE of about 20.4, take the inverse, and that would be the earnings yield. That's a 4.9% earnings yield. Add the two together, and you're looking at a roughly 12.9% expected annual return. That's solid, but it's also about what the broader market delivers. So at today's price, you're not really being compensated for the extra risks. Management's promising consistent fee growth and margin expansion, but I'm not sure how realistic that is. Margins have already been compressing, and if fees rise too much, investors can and will switch providers. A lot of their shareholder returns come from smart buybacks when the stock's cheap. When you look at their rolling returns, they move almost perfectly with the forward PE. When the stock's expensive, future returns fall. When it's cheap, they outperform. That's not luck. That's just good capital allocation. Something to be expected of a company like BlackRock that focuses on capital allocation. Sure, there are tailwinds. Governments are increasing their allocations to private equity, emerging markets like India are growing fast, and the world's aging infrastructure is desperate for financing. But it's hard to translate those big themes into predictable returns, especially when you're paying a premium valuation. At a forward PE of about 20 or about a 5% earnings yield, I think the risk to reward ratio just doesn't make sense. For me, this is a watchlist stock. A fundamentally great company at a bad price. If BlackRock pulled back to a 15 to 17 forward PE, that's a 5.9 to 6.7% earnings yield. That extra 0.5 to 2% above the current 4.9% earnings yield makes a big difference. It turns a market matching stock into one that can actually beat the market. And that's when I load up, collect my tolls, and then sell if it gets too rich again. Like Dell, this is a name that rewards active management, not buy and forget. You trade the valuation cycle, not the narrative. Everyone loves to hate BlackRock. They call them evil, manipulative, the shadow hand behind capitalism. Evil or not, BlackRock's figured out capitalism better than anyone else. They'll keep taking their cut whether you cheer them on or curse them. Why not make that work for you? Let the villain fund your retirement. Because in markets like these, you don't have to be the hero. There's no trophy for it. So you might as well get paid when the villain wins. If you stuck around this long, join me on Discord. I'd love to talk more about investing with you specifically. You clearly enjoy investing as much as I do if you've watched the whole video. Link in the description. Thanks. Bye.